But now the first place I'm going to look at are ETFs. So the first thing I'm going to look at is my particular ETFs. So what are the ETFs we have out there? Let me pull up I had all this stuff pulled up, but I had to go back and restart everything. But, we're going to make it happen. We're going to make it happen. So let me share the screen here. 1 second. So if you're coming in live, make sure you hit that like, subscribe, comment, and share button. Hit that like button, share this around with your friends, and I definitely appreciate it. Definitely help out the platform, and definitely help me grow this platform. And congratulations. Thanks, everybody. We just crossed 46,000 subscribers on YouTube. We're at 46,000 on YouTube, and we're about to hit 40,000 on Instagram. And stuff like that. So thank y'all for tuning in, and the people that catch the podcast playback really means a lot to me. All right. So the first thing we got is PAVE ETF. So I look at the PAVE ETF, and what I did was I compared PAVE, grid, and infrastructure IFRA and the transportation ETF. Let me make sure I put this up so y'all know what I'm talking about. We're not going to go through breakdown of funds. We are now on our ETFs. So we're now on our ETFs. I made sure I put that on there. So what I went and done was I went and created, I looked up PAVE, I looked up grid, and I looked up the infrastructure and transportation ETFs. So XTN for transportation, IFRA for US infrastructure, PAVE, PAVE, I don't know what that one means. Oh, there it is right in front of my face. Global United States infrastructure development ETF, and I looked at grid. So I looked at all their performance, just simple, like, hey, how they performed so far this year, because this build has been talking about all year long. So PAVE was number one. It's at $27 right now. It's an ETF, an exchange traded fund. That's one way a person says, hey, you know what? I want exposure to this potential growth in the economy where we're donating money, where the government is pretty much going to print money. Or, they have a lot of money saved up too in the highway fund. Highway trust fund, I think it's called. And what they do is every time we pay gas, we buy gas, they charge us all these little funny tax, 18 cents per gallon, whatever. This money goes into the highway fund, and then they take that money out of the highway fund and give it to companies to build highways, essentially what it's looking like. Now, granted, ladies and gentlemen, I'm not the person here. I'm not a political governmental official that knows all the intricate pieces of how the money moves inside of the government. I don't work there. I don't have experience in that aspect. I just can speak generally. So the government makes its money off of taxes. And when the government makes its money off of taxes, or if it doesn't print money, if it makes money off of taxes or revenue from taxes, then it turns around. That's how it gives money out to people to say, hey, go build a road, go build a bridge, all of the good stuff like that. And I'll probably get into highway trust fund in another episode. That's not very relevant, I don't think. People are like, okay, yeah, it's there, whatever, right? So here, when I look inside of PAVE, I look at their ETF, I look at their holdings, right? So number one, I look at who are the top companies inside of this ETF. Right here's a company that I like. They have Nucor, NUV stock symbol. They got TT in here. They have Norfolk Southern companies, things like that. They got some energy companies. John Deere, they have for a while. John Deere is about 3% of this ETF. So let's look at this fund's overall objective. This investment seeks to provide investment results that correspond with generally to the price and yield of the United States Stock Market Infrastructure Development Index. I didn't know they had that. US, I got to look that up. Can you invest into that United States Infrastructure Developmental Index? That sounds pretty interesting, especially looking at this new bill. The fund invests at least 80% of the total assets and securities of the underlying index, right? So one company that I pay attention to that I like, I know for certain, most infrastructure construction companies do very well financially, fundamental. So let me look up their, we could look it up right here. This can give us their financials. Let's look at their financials. All right. So here are their financials. This is probably a 10K. Okay. This is their annual 10K, right? 10K is annual. So let's look up, we could look at quarterly. That'll probably give us their latest quarterly report that came out. The latest quarterly report came out June 30th, 2021. Okay. So let me see. What is this data? Okay, it's in 1,000. So that's the thousands, millions, and billions. So their total revenue was $8 billion. The cost of revenue was $6 billion. They walked away with a $2.4 billion profit during this quarter. And then you're looking at operational expenses. Operational, you got to subtract out the operational expenses. Now they left with operational income from doing business after paying all the bills. They walked away with $2 billion. So look at that top line revenue of $8.7 billion. You can look at this top line revenue is growing quarter to quarter. So that's good. What we want to see. Their pre-tax income. So, you always got to look at what people pay taxes on. That'll definitely tell you what the truth is. So they got $2 billion in pre-tax income. That's before they paid the tax provisions. They paid $4.5 million. Okay, make sure I got this right. Thousands, millions, $400 million in taxes, right? Then their net income, after paying their $400 million in taxes, they're left with $1.5 billion, right? So, okay. So after paying taxes, they left with $1.5 billion. Their net income comes down to $1.5 billion. The EBITDA, $2 billion. We already knew that. Profitable company. Let's look at here. So, okay. So that's the income statement. They brought in $1.5 billion last quarter after paying taxes. Congratulations to them. So let's go to the cash flow statement. Let's look at this cash flow statement, right? Let's see their net income. Their net income, it should be 1.5. So their net income, operational cash flow. So look at this. Operational cash flow is kind of growing. It kind of did a little fall off there. They don't have all of it in here, but okay, they got two. Why they give me? I want quarterly. They switched it on me. They thought they was gonna switch it on me, but I found it. But anyway, you can see the operational cash flow is coming in. They got cash flow coming in. They made $1.3 billion from cash flow, which is a good thing on a good company. Investing cash flow, they invested $300 million. Financing cash flow, almost $1 billion there. But the big thing I look at is that they're positively making money. Free cash flow, they got 963, almost $1 billion in free cash flow. So let's see what they look like, what they have in their bank account. Now let's go into the balance sheet. Let's go down to the quarterly statement. Okay, their total assets are 21 billion. Looks like there. Their total liabilities at 9 billion. That means their working capital is at 11 billion. Okay, that's good. Working capital is at 11 billion. Let's look at their total current assets. The total current assets is 10 billion. Now, this right here is something of concern. If I'm reading this correctly, their current assets is okay. All right. Let's look at I'm looking at it wrong. That's $10 billion in total current assets. Let's look at their total liability. This is going to give me their working capital. The working capital, okay, so about $2 billion there. So they got about 7 to 8 billion in working capital, which is good. So they're reporting as of their total current assets of June was 12 billion in total current assets. Then they walked out of the total current liabilities was only 3 billion. So that's about 9 billion, almost 8 to 9 billion right there in working capital. So they have a nice working capital. The total assets is 22 billion. The total liabilities is 10 billion, bringing that the company's net worth is around 12 billion, which is AKA the shareholders' equity. So very healthy numbers here that this company has done, that I'm looking at, right? So